obviously there's a lot gone on this year. Interest rates have changed. There's a lot of news and negative, positive, everything going on at the moment. Cost of living, base rates obviously jumped another 0.5% recently.
Yeah.
So just generally speaking, how are you finding things in the mortgage world? And is there anything that you would like to advise or throw some tips for anyone that's, thinking of selling or buying between now and the end of the year, I guess, or going into next?
Yeah, you're right, Ian. There's a hell of a lot going on out there. Rates have not been this high for, I can't remember the stats. I dare to say something around the 20 years. It's absolutely crazy. But it's still a buzzing market out there. There's a lot of activity. People are still trying to move home, which keeps us busy. So I think I've alluded to it with you before that there's a couple of reasons that interest rates are on the rise. There's obviously the Bank of England base rate. That's a big driver. Banks have to price according to that. But because of the volume of business the lenders are seeing at the moment, they are absolutely flat out busy. NatWest at the moment are taking 20 working days, so pretty much a month to process an application. And compare that to their best days, which you get it done in 2 or 3 days. It's really busy. And the only way the banks can control the flow of business are to try and increase their interest rates. So we've got a sourcing tool that brings up all the best deals, and if they're at the top, they get a load of business. So if they tweak their rates up a little bit, drop down that sourcing, they tend to see the volume drop off. But what's happening, as soon as one bank drops off, the next one's busy, they increase rates, and it's just a snowball effect. So all the banks are bumping their rates up to try and stem that flow of business, but it's just not working because they're all doing the same thing. Sounds crazy, but that really is what the lenders are telling me at the moment. So I think that is actually a short-term problem. Once they get their volumes under control, hopefully that competition to almost outprice is going to end, and we might see things start to calm down and rates start to drop again. So with that thought, I mean, I wouldn't tell anyone what to do one way or another, but me personally, I wouldn't go for a 5-year fixed, not whilst rates are at 3.5% like they are today, because you might look at rates in 2 years' time and see them start to come back down again. And so I don't know, shorter fixes, tracker products maybe, could be something to definitely talk to your mortgage advisor about right now.
Do you think that potentially then, much like we might have said with the property market prices, we're there or there around the peak, we believe, in terms of how prices have gone and what might happen over the coming months? Still, there'll be maybe some incremental increases, but there is talk that we're at the peak. Do you think that's potentially the same with rates in the coming months then? So that's why you kind of would say don't go 5-year fixed, because actually you might find there's a better deal in 2 years' time and so over the 5 years, if you fixed twice in that period, you'd be better doing it that way than just once potentially.
I think quite possibly. I wouldn't say we're at the peak now. I think, unfortunately, things probably will get more expensive. I think the base rate is going to keep climbing, probably for another year, maybe. And I don't think we're going to see the flurry of increased rates stop yet. But maybe over the next 12, 18 months, then we might peak, then we might see things come back down. So tracker rates right now, I think we can probably pick a tracker up, I'll quote Skipton, at 0.66% with a great loan to value. So that's going to put your fixed rate somewhere around 2.5 compared to probably closer to 3.5. Sorry, the tracker rate at 2.5 compared to a fixed rate at 3.5. So if you can ride that out for a year and then benefit from when they start to drop down again, that's kind of definitely a thought process. One way people are talking at the moment. But if you fix now, 5 years, 3.5%, you might actually see some better deals coming up within that 5-year period.
That's quite interesting because it's a bit of a mortgage gamble, isn't it, Ellen? You're kind of going, right, I could lock in and be secure at 3.5, or I could take a risk, be a whole percent lower, like, the best part of a third lower, and just hope that the base rate doesn't jump up that whole percent in that period of time. Are you having a lot of buyers at the moment talking to you about changes in the mortgage rates, or maybe people have kind of gone and got a rate from 6 weeks ago, 8 weeks ago, then they find and they think, oh, actually, it's a bit different now when they go back to lock it in?
Yeah, we see a lot of people who from their initial start when they start looking and they speak to a broker and they've got X budget, by the time they find and they revisit that process, the repayments have gone up, their sort of loan to value, everything is so affected from the rate rise that actually the budget they thought they had is way off. And, you know, I think certainly now is really imperative to keep in touch with the broker and make sure you know exactly what you have to spend each weekend you're going out looking, because the market's still busy enough that we are seeing multiple offers on properties, and there's nothing worse than when someone goes, yeah, fine, I'll go 15,000 over, thinking they can, and all of a sudden, you know, that's just not realistic anymore. Things are changing so quickly.
Yeah, the goalposts keep moving, don't they, Dave? It's hard for you at the moment. I would imagine, are you having a lot of those buyers come back to you and say, right, I'm ready, let's get my 3% deal locked in, and you're like, well, actually, it's not that anymore?
Yeah, absolutely. As far as rates are concerned, we're having to do our job 2 or 3 times for every customer. Gone are the days where you quote a rate, they go off, find a house, they come back, it's the same or even cheaper. Now, like Ellen just said, they will come back a couple of months later and it's, oh, yes, sorry, that's going to be 150 quid more than we spoke about before. And that is a difficult conversation. Most people can find the money. Interestingly, what also happens is the banks themselves adjust their affordability model. So if there's a significant period of time, if somebody's spent 3 or 4 months maybe looking for a house and rates have gone up like we have seen them recently in that time, the bank might be offering you a lower mortgage than they would have 4 months ago, because their calculations are all based on how much the payments are going to be for you at the end of the month. How much is that interest rate going to be, which affects those payments? So if they're suddenly sat there saying, well, actually, you're going to have to spend 200 quid a month more on your mortgage, they'll probably offer you less money because they just don't deem that higher payment as affordable. Strangely, the FCA scrapped the stress test that we've probably heard about in the news. But I think very wisely, lenders haven't really followed suit. They're still keeping a stress test in place. So they're not just saying, can you afford your mortgage at 5% or at the variable rate, whatever that be. They're probably still putting an extra 3% on top just to be safe, just in case rates do keep climbing. They don't want people all of a sudden not being able to afford it. So their calculations include a stress test. So when we see the small changes, it does impact the amount you can borrow.
That's quite interesting, actually, because one thing that I've noticed from being, I don't know if you know, I do a little bit on social media. And when I'm on social media, some of the comments that I get when I'm talking about the market, Andy, you probably find this as well for you. Some people have just got it fixed in their mind that the world is about to implode, recession, everything's coming to an end, you know, cost of living, this, that, and the other. The world is going to implode. House prices are going to halve overnight. And, you know, we're all going to be using coals and kind of naked wood fire to keep the house warm. Like it's gonna crash. And one of the things they've jumped on since the 1st of August when the stress test changed is the equivalent of going back to 2006-07 when everything imploded last time, because you know there was 105% mortgages, this, that, and the other. That's one of those things, Andy, isn't it, where people look at that as a real negative, but actually, as Dave said there, that's quite nice to know actually they're staying secure on it. It gives probably a bit more confidence to the average first-time buyer, I would think.
Yeah, it's the classic negative news, isn't it? People read it, jump on it. But then I think if you take yourself out of what's on the daily news and think about what the housing market's gone through in the last 24 months, for example, you know, it's had 4 consecutive base rate increases, a global pandemic, and house prices have boomed. So, you know, it's as rock solid as it's ever been in probably one of the most difficult time periods that's ever existed. So, you know, if you flip it that way and have a look at it, then there's no reason for it to implode and everybody to be living off coal and growing their own crops and trading things like that. You know, if we just all just took a step back and realized what's happened in the last 24 months, okay, we've had a little increase to the base rate again and people are going to pay a little bit more. But in reality, you know, people still need somewhere to live. They still need somewhere to move to. And if you're living in a flat and you want to buy a house, you're going to make that move, in my opinion. And if you're living with your parents and you're going to buy your first property, you're going to make that move. If your budget's wise, you want to buy a 2-bed and you can't afford it, then you probably just slip back into a 1-bed, or if you want to buy a 4-bed, you buy a 3-bed. You know, people will still make the moves, and all the cogs in a transaction will still be there and still work. So yeah, I think it's all nonsense. I think we're still good for another, well, at least back end of next year, personally, in terms of small growth. Not as strong as it has been, but I still think it will take small steps forward.
Demand is still there. I think that's the biggest difference than the last time the market crashed. The demand wasn't there previously, but now that there's still some real supply and demand issues, you know, that's very heavily weighted in one favor. So I think that's going to help us sort of stay strong.
Yeah,
From a
I totally
mortgage point of view on that, sorry, and I think if you can ride out a short-term pain really of a relatively high interest rate, things will settle down there as well. So like Andy said, if you're going to move, do it, because it's not going to be like this forever, is it? We would expect maybe 2-3 years higher than normal interest rates, but then hopefully plateauing again and coming back down to a bit of a more acceptable level.
I think the other thing that's very, very clear, if we go back to the pandemic and we look at the actions from the government in the pandemic, because there was, you know, the same people that bark at the moon were also very much saying the world is about to implode and the market was going to crash, and, you know, the housing market was tumbling, and it did quite the opposite. And a part of that is because the government they want to be hero status in terms of offering some incentives. And at the moment, there are no incentives in the property market. Help to Buy is obviously now gone. Stamp duty holiday is gone as well. So I just wonder, with potentially, you know, down the line election, you know, potentially coming up, and everything that's going on, is there going to be a case that actually some of what the government are looking to do is going to be to take that hero status if the market did start to come down and if prices were starting to drop? I think we're in a state of mind at the moment where they know how important the housing market is to the UK, and they would come in with something, because there is no incentive at the moment. So that's something that I would expect to see, especially with the government in play at the moment, although it's in turmoil, obviously. But I think the Conservatives would definitely bring some sort of incentive in play to keep the housing market going. And much like you said, Andy, stocks and shares have obviously tumbled a little bit since the pandemic, and some of the other investment strategies have gone down, but the housing market has stayed strong. What sort of conversations are you having, Dave, with investors at the moment and landlords? Are you still seeing more landlords sell than buy? And the ones that are buying, what's their goals and their process? What's the trends there?